Really interesting news going on with Snap. Take a look at the quarterly results. I want to walk you through the numbers first. Third quarter daily active users come in an improvement, 363 million. Estimates were for 358.7 million. Third quarter adjusted EBITDA, that's our new outlook for profitability, according to Mandeep Singh, 72.6 million versus estimates of 24. And that gets us to a third quarter adjusted EPS of 8 cents versus a loss per share of what was expected of 2.2 cents. That all sounds good. And then you get comments that Snap will not be providing formal financial guidance for the fourth quarter, but they are authorizing a stock buyback of up to $500 million, all, of course, on steadiness of revenue. Three-quarter revenue, $1.13 billion. Estimates were for $1.14 billion. Really pleased to see that Mandeep Singh, senior technology analyst for Bloomberg Intelligence here. We've given you a cool 30 seconds to break down the numbers. What is going on in this post-market?
Well, I think the top line numbers, especially the KPIs, the daily active user count in the US, as well as the adjusted EBITDA number, is a beat. And look, the expectations were low going into the quarter, so I'm not surprised that, they beat those numbers. But to me, this just points that you're not going to see more negative revisions going forward.
Why aren't they giving us guidance for the fourth quarter?
Well, it's an uncertain environment, and we know that, no one exactly knows how the macro is going to play out, and advertising, given the cyclical nature, we kind of expected that.
Yeah.
But I think with any consumer internet company, it all comes down to the daily active users, the engagement.
But that's better. I don't understand. They're growing their daily active users. They're also seeing a decent amount of time spent on the app overall. What is it in here that has really... the fact that this is a stock that has already gone from a $100 billion valuation to a $20 billion valuation, it's eroded more than 80% from its highs. What more is there to dislike? How could this not be priced in?
Well, and you're right, it is. So at the end of the day, you have to ask yourself, does this company outpace the overall growth in the digital ad industry? And the answer is most likely yes, given the size, given the engagement. There are only 3 or 4 platforms with a daily active user base of around 100 million in the US. And you can count them, it's TikTok, Meta, and YouTube. So Snap being the 4th one. So as an advertiser, you don't have a lot of places to go to if you want to really spend those dollars. The question is, when do those dollars come back the way it used to be back in 2021?
I know that you rightfully so talk about the numbers relative to the estimates. Jump on with me on a tangent to do the year-over-year numbers. And I'm curious how you think about this. Free cash flow, 18 million, but a year ago we were at 52 million. Adjusted EBITDA was 73 million. Again, these are better than expected, but year over year that was $100 million more the previous year.
Well, look at the growth rates last year. Last year they were growing at 50%.
Right.
Now they are growing mid-single digit.
Okay.
Still, I think they were cash flow positive. That's a positive sign that they are cutting costs. And the biggest problem with Snap was their cost structure was kind of bloated relative to the peers. So that's why they announced that major job cut. I think it was about 20%. And that was kind of hinting in the right direction that, look, we care about controlling costs here.
I mean, what we've got to remember is it's down 20% after hours, but this is a stock that generally moves about 20% after hours after earnings, and actually usually to the downside. The options market had already priced in the fact that we're likely to get these wild swings. But we are sort of learning that this is the slowest growth ever, quarterly growth ever for Snap. And is it just really that people just hoped they'd beat these incredibly low expectations, hoping for some sort of flavor of positive mood music?
Yes, I think they are looking at each of the metrics, and obviously not everything kind of look clean in this print, but at the same time, you really have to think about inflection. With a stock like Snapchat, maybe this is not the quarter, maybe it's 4Q, but to your point, if it's down 80%, there will be a valuation trough, and that will be signaled by, when we'll see an uptick in advertising. And to my mind, you've seen 30% cut for next year estimates. In the case of Snapchat, for Meta, it's just 12 to 13%. So guess what? If this is bad, you could get an even worse print for Meta next week.
Which is why they're falling, yeah.
A $500 million stock buyback after you're looking at downsizing the company, is that the appropriate use of cash?
I mean, it's sending the right signal to investors that, look, we are controlling costs,
Okay.
we think our stock is cheap, and we are initiating a buyback. Now, will 500 million make a big difference in the grand scheme of things? Probably not. But at the same time, I think they're trying to suggest that we will be free cash flow positive next year.
Are there going to be more changes necessary? Or is it just patience that is needed from an investor base right now? Do you want to see the slashing of course, workforce, the focus on trying to preserve some sort of margin? Do they need to do more to stabilize this company?
Yes, and that's why it's good that they went big in terms of that 20% cut. It kind of signaled, look, we know what it takes to be free cash flow positive, and they announced that upfront as opposed to doing it in 2 different rounds or 3 different rounds. So I do think cost control was required because they overhired during the pandemic. They grew their employee base almost 30% every year. Now, you could argue, if you are growing at 50%, you can keep growing your employee base by 30, 40%. But if you are growing mid-single digit or high single digit, then I think they are trying to fix that cost structure right now.